Well, thank you very much for inviting me to join this important discussion. In the next 15 minutes, so I will speak about the China green finance landscape, some of the updates and its connection with the rest of Asia. And then I'll probably leave a few minutes on international initiatives such as the Common Ground Taxonomy, which I've been working on for the past 5 years. And I hope this will extend to include Australia. And also some ideas on green trade within the RCEP region, which involve Australia as well, and maybe a little bit on carbon market connectivity. So now let me start with China. As you said in the introduction, China has been working very hard on green finance. In fact, 10 years ago, when I was chief economist in the Chinese Central Bank, I led the drafting of the Chinese green finance guideline. And 2016, we published this guideline, which I regard as the first official top-down policy framework for green finance. And under this framework, we have now built what I call 4 pillars for the Chinese green financial system. One is taxonomy. Initially, we had a couple of taxonomies, one for green bond, which I drafted, in fact, 10 years ago. And we had also taxonomy for green loans. And now we have consolidated everything into one China green finance taxonomy published this year. So it's unification, which helped reduce the risk of greenwashing. And the second major pillar is the disclosure requirement. Back 10 years ago, when we applied the taxonomy, we asked all the issuers, all the borrowers for green loans to disclose environmental benefits information, meaning tell me how much carbon you reduce, how much PM 2.5 you reduce, how much wastewater you reduce, and so on. That information is mandatory required for the corporates to report to banks and banks to report to the regulator. And recently, we're switching towards ISSB-based disclosure on the corporate level. And China is one of the, I think, 37 adopter of ISSB standards. And it's now being implemented on massive scale. Some of the fintech providers in China was telling me that they're able to reduce the cost of reporting on ISSB by 95% while digital innovation. And the third pillar is the financial products we developed under the green finance framework. Now China has green loans, green bonds, green equity funds, green ETF, carbon markets, voluntary carbon markets, and many others. The Chinese green lending market is now by far the largest in the world, with outstanding amount of 42 trillion, which is close to $6 trillion. And our green bond market also the largest, with outstanding amount of 2.3 trillion RMB. And you may ask where did this money go from green loans and green bond issuance? They went to what I call the green economy, for example, the renewables, electric vehicles, and batteries. And that's why these industries are now growing so fast. And many of these were growing at 20, 30, 40, 50% every year. And as of end of last year, the newly installed renewable capacity in China is 60% of global total. And the EV production in China is 60% of global total. And battery production is 70 to 80% of global total. And the industries are still growing very fast. For example, the first half of this year, our green loans were growing at 25% year on year, on top of the $6 trillion outstanding balance. And the green bond issuance still growing at 50% year on year in the first half of this year. Now, the fourth pillar is the incentives. We put in incentive with the belief that we need to mobilize more private sector money to join the green journey. Because a lot of our green projects in early stage did not make enough money, not profitable enough to crowd in private sector. And we made a lot of arrangements, including using the central bank decarbonization facility, which offers a lending facility at a funding cost of 1.5% for renewables. And the local governments also provided subsidies for interest payments and many others. So some of the jurisdictions in China, which are called pilot cities for green finance, were able to grow their green loans at 40% every year in the last 8 years. For example, in Huzhou, which I think some of you actually went, one of the what I call most successful green finance pilot city, the green loan ratio in the city, which is the total green loans as percentage of outstanding loans, is 34% now. and some of the banks in that city had reported 45% green loan ratio. Now, what does that mean? Just give you a benchmark. Emerging markets, excluding China, is about 3% in terms of green loan ratio. And in Huzhou, it's 10 times that. In some of the Huzhou banks, it's 15 times of that in terms of green ratio. So that's the beauty of the incentive. You have the incentive, maybe just 1 or 2% of total funding costs, they're crowding 100% of private sector money. These are the developments as of now. And the most recent developments and the strongest growing segment of the sustainable finance landscape in China is transition finance. Back 3 years ago, when I was still the co-chair of the G20 Sustainable Finance Working Group, the group published the G20 Transition Finance Framework. And immediately China began to implement. At the national level, the central bank has introduced a transition taxonomy for 4 sectors, including steel, cement, coal-fired power generation, agriculture. And the regional level, we had 20 provinces and cities introduce their own transition taxonomies. And in some places, they were able to construct what I call ecosystem for transition finance to enable companies to get transition finance at a lower cost than otherwise. For example, again, take Huzhou as an example. They introduced the transition taxonomy, clearly defining what are the qualified transition activities, the technical pathways, and they provided the free carbon accounting for companies. Basically, the government does carbon accounting for the companies for free, and then pass on the number to the banks. So the banks are able to assess the carbon performance of the company. And also the government provided a free template for transition planning so that the company knows how to do transition plan without asking or paying a lot of money to the consulting companies. And also the government provided interest subsidies for transition loans at 50 basis points for the interest payments. So these are the newly introduced incentives, which are for transition finance only. And I'm feeling that the transition finance is now growing at 100% every year in China and will continue at that pace for the next couple of years. Now, moving on to probably a couple of international issues. One is the Common Ground Taxonomy. This idea, which I initiated back more than 5 years ago in a discussion between China and EU collaboration. And we said at that time, China had a taxonomy already to define what is green, and Europe was about to publish its European taxonomy to define what is green in their way. And it looks like many other countries will do their own taxonomy. Eventually, 200 countries have 200 taxonomy, and they're different. It will be a big problem for the global sustainable finance market because it will create market segmentation. For example, if Chinese green bond issued against Chinese taxonomy, they're not recognized in Europe. And the Europe will say, hey, your green is not my green. I cannot buy your green bonds. So to address this problem, we initiated this IPSF taxonomy working group, which was agreed very quickly by the European side. So the taxonomy working group launched in 2020. I had the honor to co-chair that taxonomy working group since then, and working with the European colleagues. And in 2022, we produced this first version of Common Ground Taxonomy that's agreed by Europe and China. Immediately after that, the Common Ground Taxonomy, or CGT for short, has been used by markets. All Chinese banks issuing international green bonds began to use CGT as a label because they feel the real benefits of that. With the CGT label, they don't need to do verification against the 2 different taxonomies. And the cost is also going down because more people recognize the CGT label means that the company is actually greener. And that's why they get a funding cost which is 10 basis points lower than other labels or other stickers by using the CET. And this is also being used in China already. I was told 140 issuers in China have issued green bonds in China with multiple labels against the domestic taxonomy and against the CGT taxonomy and saved money by reducing the funding cost. And recently, Singapore joined the CGT. Last year, it became the multi-jurisdiction Common Ground Taxonomy, involving Europe, China, and Singapore jointly produced this MCGT. And immediately after that, Singaporean banks, including OCBC, have arranged some transaction using MCGT as label, including these transactions of raising money in China for ASEAN countries' green projects. So going forward, I think the CET, MCET exercise will increasingly play a role of enhancing interoperability of taxonomy across jurisdictions and facilitate low-cost green capital flows from jurisdiction to jurisdiction. And I'm hoping that the more jurisdictions will be joining the MCET exercise. I have invited Hong Kong and Australia to participate in discussion, and hopefully we'll achieve some consensus by end of this year and begin the MCET exercise for 2.0 version with more jurisdictions coming, including Australia. Now, the benefits for Australia to be engaged in this kind of mutual recognition of taxonomy and standards is that you have to trade a lot of stuff with China and other countries. For example, iron ore, right? Beef. And I had a lot of conversation with your experts saying that if China, Australia can agree on the same definition of what is low carbon iron ore, what is low carbon beef, and potentially in the framework of the Common Ground Taxonomy, then China can be buying more of your low carbon beef and low carbon iron ore to help China to decarbonize its own steel industry and help China to reduce carbon in its consumption. And this is a benefit of harmonization or interoperability. And the finance have to participate. If we have lots of trade of low carbon goods and services, then finance can use, for example, linked products, systemically linked products to participate in the production and the trading or procurement of these products. Maybe one more item to mention is the Capacity Building Alliance of Sustainable Investment, which is the initiative I launched back about 2 years ago at COP28 to enhance capacity for sustainable finance, especially in emerging market and developing country. This was sort of inspired by G20 work, which called for strengthened effort for capacity building for many other countries which do not have the complete ecosystem for green finance. That's why the CASI was launched 2 years ago and now involving 69 organizations globally. And I'm glad that the AIGCC is one of the 69 members and helping us to develop contents for training as well as for distribution. So going forward, I'm looking for more partners in Asia, in the rest of the world to co-develop these contents and disseminate to a broader audience. Last 1.5 years, we have trained 7,000 people from 90 jurisdictions already, and we're now deploying online program under the CASI, which is much lower cost and effective in delivering to a larger audience to the region, as well as to, over time, other parts of the world, including Africa and Latin America. So with that, maybe Rebecca, I conclude here and thank you once again for inviting me and hoping that this conference is a great success. Thank you.
Thank you so much, Dr. Ma. We look forward to hearing from you again.
Thank you.
Thanks for your time today.